Welcome back. October was a month to forget for Wall Street and bulls. All three major indices had their worst October since 2008, the height of the financial crisis. Thanks to strong corporate earnings, the markets regained some of the losses this week, but Apple disappointed with its earnings release. So what does all of this volatility mean for the rest of the year? And importantly, the jobs numbers out going into the midterm elections on Tuesday. Joining us right now to dissect all of this, an all-star panel. We've got James Freeman of the Wall Street Journal and Fox Business's own Simonetti. Great to see you guys.
Hi, Maria.
Thanks so much for being here. So let's talk first about, well, it was a tough month in terms of technology trading down and the markets overall in October. What do you think that says, Lauren? What's your take on what went on? October
is typically a very volatile month historically, and it was most volatile. I mean, the most volatile, as you noted, since the height of the financial crisis, essentially this year. But now the start of November has been amazing. It doesn't mean the volatility has gone away. The volatility is going to stay, I think, because the Federal Reserve was now handed confirmation that this economy, vis-a-vis the jobs report most particularly, is strong. And do they have to hike interest rates, maybe more aggressively, but certainly continue to hike? And that could be a source of concern for a lot of people. So I think the volatility will stay through the new year. Yeah, because when you see rates up at 3%, it gives you some alternatives, right? I mean, you know, James, if I'm going to get 3% in a 2-year, then maybe I will take some money out of stocks. But at the end of the month, Friday, we got great jobs numbers just a few days before the midterm elections. That was good news. Yeah,
it looks like we've got an economy that can sustain higher rates. And, of course, higher rates, savers are saying, thank goodness, finally, after this decade, I'm finally going to get paid for saving my money. But it's a lot of good economic news this week. You mentioned the blowout jobs report. Wages going up, hours worked going up, productivity rising, still not where we'd like it, but really an economy firing on all cylinders. It's exciting.
And we talk about the closing arguments that Republicans and Democrats are making before Americans do go to the polls. And for the Republicans, the president campaigned on, we're going to bring back manufacturing. We're going to change things with China. And we are seeing that happen days before Americans actually go vote.
How do you read the Apple report? That was one report that people thought it was better than expected initially. And then the stock trades down 6% right out of the gate on Friday after the numbers. And then they changed what they're going to be reporting. So less transparency. They're not going to tell us about unit sales. Kevin Kelly on the show on Friday said, yeah, and also they missed on unit sales. So it wasn't at all better than expected. It was actually a miss.
They're in a new environment, Apple, where they've come to understand that you are not going to upgrade your phone as frequently as you used to, but you will spend more money on that upgrade when you do make it. So the average selling price for the iPhone was $790 and change.
It's expensive.
It's expensive. So they're in a new universe where you're going to hold on to your device a little bit longer. They're also battling Amazon. Amazon with Alexa has control of your home. You go home, you put the Apple products down. It's all Amazon. So Apple needs to figure out a way to get, you know, out of maybe off your wrist and out of your pocketbook or in your pocket with your phones and maybe go back into the home to battle with Amazon. They might be losing that innovation that, and I do love Tim Cook, but there was a certain innovation that Steve Jobs had.
Oh, for sure.
Well, I would also point out overall, they exceeded revenue and profit expectations.
Records.
And it was like a lot of the companies that where their stocks suffered in October, where the outlook was what was troubling people, not the actual results, but the outlook. And I think maybe this recent economic data will make people a little more optimistic about the future.
So let's look ahead. Year-end expectations. Fourth quarter is usually a very important quarter and a good quarter. Impactful quarter in terms of overall GDP because it's when people are shopping, and that's 2/3 of the economy, consumer spending.
Right, and consumer confidence is at what, an 18-year high?
18-year high. That's right.
We are feeling good. Wages up. We got that 3%, that magic 3.1% year over year, best since April of 2009. I think with the confidence and the money in our pocket. I think we're going to spend money, and we will see a Santa Claus rally.
You think it's going to be a good shopping season for the fourth quarter? What about you, James, in terms of the fourth and going into the new year? Because that's where the worry has been, that this growth slows down next year.
I think what we really want to see is another surge in business investment. We saw it in the first 2 quarters of the year. Didn't really see it in the third quarter. Maybe that gets revised upward, but especially if there's good news on China, that's another reason for businesses to go ahead and pull the trigger on new investments. If that was one of the big worries hanging out there, that would be that would be a nice trigger for more investment.
All right, we'll see. I'll tell you, the administration says they don't see this slowdown on the horizon that people are talking about. So we'll be watching. Great panel. Thank you so much. Lauren Simonetti, James Freeman, always a pleasure.